Everybody, and welcome to Tuesday Training. I hope you're having a fantastic week. As always,
we are live from Austin, Texas, right here in Insurance Syndicate headquarters. And man, we have a great show for you.
Good morning. What is happening, man? It's Tuesday. It's Tuesday, 9 a.m., which means I'm live right here in Insurance Syndicate headquarters, ready for Tuesday Training. Hope you guys are having a fantastic week, fantastic day. Boy, we've got a lot of news today. We got news. We got some updates. I want to talk a little bit about AHIP with you guys. AHIP came out, I guess it came out yesterday. That was the first notification I saw on it. So I grabbed it, banged it out, piece of cake. No offense, but I just went next test. Pretty simple. Some of you might need to study, and I would highly encourage you to do that. But I've been doing, I think this is like my 10th or 11th AHIP to complete. Because I wasn't out in production. I wasn't really doing it back in, 2012, 13, 14. I want to say somewhere around 2016, maybe. I started doing AHIP, something like that. Not that it matters. But anyway, AHIP is out. I've got a discount link. I've already put it in the group. I am going to cover that some more, as well as some tips on AHIP, my impressions, yada, yada, yada. But we do have some pretty interesting news that I want to cover, some updates. Kaiser Family Foundation just dropped a new study. Brown University just did a big study on insurance brokers that I want to talk about. The wiser prior authorization models under fire, quite a bit going on, and of course some fraud. So there's a few things that I want to jump into with you guys. As always, this show is brought to you by DFY CRM, my CRM of choice. Man, if you're looking for a CRM that does all the things, manages all your customer records, funnels, sales, whatever you want. He has a bundle package in there now where you can auto bundle your favorite products and give them the quotes. Like it's fairly ridiculous. If you don't have a CRM, man, give my boy Eric Fierro a holler or Tim James. They'll set you up with the demo and you can check it out. And it's also extremely customizable for things that you might want to do on your own. But diving into some news, man, let's kick it right off the top. What do you think is probably the first thing I'm going to bring up? How about fraud? Seems like every week I've got some fraud to talk about, right? And there's no shortage of it. Again, every week I've got something new in the fraud space. This article just came out last Friday. A Pearland is just outside of Houston. Pearland clinic owner indicted in alleged $906 million. Like last week, I talked about somebody, I think it was maybe 2 million, 906 million. If you're bad at math, that is about 10% shy of a billion with a B dollars. Wow. What was this person doing? Well, in Pearland, Texas, the owner of a Houston area clinic is accused of trying to steal close to $1 billion from us taxpayers. Las Vegas nurse Maritzel Yuki, whose investigators says owns Wound Medic in Pearland, along with 3 other clinics in Nevada, California, and Hawaii, was indicted Thursday in a federal court in Houston. From October 23 to April 25, prosecutors said that Yuki and some unnamed co-conspirators submitted $906 million in fraudulent Medicare and TRICARE claims. According to the indictment, the claims were for medically unnecessary allografts, which is a type of tissue transplant, skin graft kind of thing going on. We have already seen another couple that I brought up, I think earlier this year, maybe last year, that had hit in Medicare for over $1 billion in skin grafts. And that was quite the lurid tale of those two lovers that had gone down this rabbit hole, I guess, of bilking Medicare out of money. But here's another one. Basically, same thing. And some of Yuki's patients were terminally ill. and died within days of the procedure. Like they weren't terminally ill needing an allograft. They were terminally ill. And she's like, hey, since these people are dying, let's go ahead and drop some tissue transplants on them. Nobody's paying attention. Medicare doesn't care. They're just going to pay the money, which is exactly what that couple out in Arizona did with their skin grafts for $1.1 billion. They were targeting terminally ill patients that were in hospice that, for the most part, nobody was really paying much attention to what was going on. The prosecutors say she submitted an average of over 1 million in claims for every patient, and that the government ultimately paid out $297 million. Investigators said much of the money went to fund Yuki's lavish lifestyle, which included a multi-million-dollar home in Hawaii, the construction of a $4.6 million resort in the Philippines, an $865,000 Bulgari necklace. What the hell is a Bulgari necklace? And a nearly $600,000 Ferrari. And that's in addition to the Porsche, the Mercedes, the Escalade, 2 Teslas, and almost $500,000 in cash. Prosecutors said 2 companies acting as allograft product distributors paid Yuki almost $16 million in kickbacks to purchase their products. Wow. There's another one. Damn. And that's, I mean, it's terrible on so many levels. Like, just think about what they're doing to these poor folks that are sitting in hospice, terminally ill, and they're like, "Hey, we're doing another tissue transplant for you." Like, what? I don't need a tissue transplant. Unfortunately, they probably can't even communicate to them, you know. And just as I read in that previous article about the couple that was doing the same thing with skin grafts, like most of the people aren't paying attention. The nurses aren't paying attention. They just see, oh, this person's coming in. It's medically necessary. It was ordered, I guess. Whatever. Doesn't say how they got caught. But there is another person out there bilking Medicare. Moving on, and it doesn't stop there. We've got some more. Fake Medicare cards are now showing up in Alabama mail boxes. Fake Medicare cards. Interesting. How are they faking Medicare cards? Well, it was from a widespread Medicare data breach, number 1, that happened a few months ago. About 1.3 million Medicare beneficiaries are receiving new Medicare cards in the mail, but scammers are taking advantage of that by sending fake cards, potentially designed to steal their money and their identity. The Alabama Department of Senior Services had issued a warning specifically targeting or looking for fake plastic Medicare cards. So it's not going to be the normal letter that comes from Medicare, right, that has your paper Medicare card attached to it. These are people that are sending plastic Medicare cards, fake. Keep an eye on them, right? Take care of your beneficiaries. There's probably about 1 million or so of those that are going to go out in the mail across Alabama is where they're seeing them so far. But the cards urge recipients to activate them, and that's the trap, right? Because when they go to activate them, that's where they're going to catch their information, maybe their real Medicare number, their Social Security number, who knows what. And then who knows what they're going to do after that. Wow. So fairly interesting. And yes, Luz Moon, we are going to be talking about exactly that here in just a minute. Buckle up. So yeah, as it says here, how to tell the difference. Real Medicare cards are never plastic. Right. I think the thing is to emphasize is the legitimate Medicare cards are always going to be made of paper. And you never have to activate it. Like once you get it, it's yours. So if you're in Alabama, maybe that's something to be on the look for. But yes, fake Medicare cards are showing up in the mail now. Outstanding. Whew. Now moving right along to Miss Luce's comment here regarding, whoops, let me reshare that. Click the wrong button there for a moment. So you guys may remember earlier this year, they kicked off a new program called Wiser, W-I-S-E-R, Wiser, which I don't think they do. They have the meaning of it in here. I don't know that they do. Yes, the Wasteful and Inappropriate Service Reduction Model. Now, according to this article in Yahoo Finance, Medicare's new prior authorization experiment, the Wiser program, is off to a very rocky start. As you may recall from previous episodes that I've done or previous news, Medicare started a Medicare, not Medicare Advantage. This is original Medicare, right? We already know that Medicare Advantage is rife with prior authorization because the stats show that about 99% of Medicare beneficiaries that are enrolled in a Medicare Advantage plan will have to deal with some form of prior authorization. Prior authorization has typically been very limited, if even there, in original Medicare. Usually the doctor just says, hey, you need this. Boom, he does the procedure. Medicare pays for it. Everything's hunky-dory. But earlier this year, they kicked off a program for, I believe it was about 17 or 19 procedures, including skin grafts, tissue transplants, where the doctor would need to get prior authorization before original Medicare would cover that procedure. They developed this program. They tested it in a handful of states, exactly as Lou says there in the comments: New Jersey, Ohio, Oklahoma, Texas, Arizona, and Washington. And it was a pilot program where they had skin grafts, tissue transplants, certain nerve stimulations were all going to fall under prior authorization. And guess who was doing the prior authorization? Guess who was handling it? Drop it in the comments if you know the answer. Who was spearheading? Who was making the decision on whether or not that prior authorization was approved? It's our good friend AI, right? So they were using artificial intelligence to review those prior authorization requests and then obviously take care of it. And the whole original idea was that it was going to move quick. If we're going to use AI and we're going to target these first 17 items or so, then it's going to move quick. The doctor's going to be able to submit the prior authorization request. And the goal was usually within 48, maybe 72 hours tops. Boom, that prior authorization would be approved or denied. And now, according to this article, we are finding out that it is taking weeks in some areas, right? So it says here it's not going smoothly. The program known as the Wasteful and Inappropriate Service Reduction, or WISER model, requires additional approvals for a range of procedures, including epidural steroid injections, treatments for spinal stenosis, knee osteoarthritis, and nerve stimulation, and certainly skin grafts and tissue transplants are in there as well. It is supposed to be a 6-year pilot, and it applies AI-assisted prior authorization reviews to certain services. And again, we already mentioned the states: New Jersey, Ohio, Oklahoma, Texas, Arizona, and Washington. This was something I didn't know. This affects roughly 6.4 million beneficiaries that are on traditional Medicare. That is just shy of 10% of the total Medicare beneficiaries that have these ailments, right, and need some of these services. So obviously the aim of it was to crush fraud, waste, and abuse, which has kind of been their thing. But critics contend it could create the same delays and denials that has frustrated Medicare Advantage enrollees for years. The pre-authorization process and requirements can lead to administrative hassles for providers, delay for patients, and in some instances, denial of medically necessary services. And that's according to Kaiser Family Foundation. Whew. Now, if you read this article, obviously this is a Republican program, the Republican administration. I'm not trying to make this political, but I'm just going to make this statement. And this is a Democratic opinion article. Not saying it's wrong, certainly could be fact. I don't have any proof or non-proof of that, but there are some reports that are saying it is taking longer than what they expected. And it says right here, procedures that were typically completed within 2 weeks prior to WISER now take 4 to 8 weeks. And that frequently forces patients to reschedule care multiple times, prolonging their pain and allowing underlying conditions to worsen. They call it the worst of Medicare Advantage, the prior authorization. But again, this has nothing to do with Medicare Advantage. This has everything to do with original Medicare. And they're saying, hey, that's the worst part of Medicare Advantage that we're now bringing over to original Medicare. Even though it's on a limited set of services, it affects close to 10% of all Medicare beneficiaries, and it is lengthening the time to get that done. So I will drop that article in there for you guys as well. You can check it out. But pretty simple. They are definitely punching holes in this new test pilot. We'll see how it goes because, again, they're supposed to do it for 6 years. Moving along. Medicare Advantage health plans may cut extra benefits in 2027. Shocker. I don't think that really surprises most of us that are paying attention. I think a lot of us kind of hope that most of the cutting of benefits happened in the last year, maybe 2 years, but they're probably on the table again, according to this article. So it's the summary real quick says that plan members could see fewer gym, vision, and dental options. All insurers are likely to cut back on benefits, investors say. Health insurance changes could impact midterm elections, experts say, whatever. But Americans enrolled in Medicare Advantage plans should expect to see fewer extra benefits like gym memberships, vision, dental coverage. The U.S. government said earlier this month it would raise 2027 payments to insurers, right? Medicare Advantage is getting a little more money this year. They even increased it beyond what they originally thought they were going to give them. But it's probably still not enough to keep up with inflation, right? So chances are we are going to see some more things. And some of these things that they're cutting, you have to understand, like there is a utilization factor going on with some of those, especially in the gym membership category. You may remember a while back, a few years ago, United Healthcare used to have silver sneakers on their Medicare Advantage plans. And then they switched to something called Renew Active. I remember seeing a report from United Healthcare, or at least a plug, that they were only getting about 17% utilization on their Silver Sneakers program. And obviously they have to pay to be involved in that program, right? So they ditched it in order to save money and did the Renew Active program, which is apparently a little less expensive. Similar concept, not exactly the same. And we may see stuff like that cut back some more because everybody wants the gym membership, but nobody goes to the gym. I mean, shit, I have a gym membership and I hardly go right now. I need to get my ass over there. But like 17% utilization, if only 17 out of every 100 people are using the benefit, then it's not going to fly. It's going to be unprofitable. And even now, like, in order to have supplemental benefits in your plan, like Medicare wants to see that the utilization rate is high. If the utilization rate is low, they're going to tell you that you got to cut that benefit because it's not performing in the plan and it's costing more money, right? So it's an effort in trimming cost. But insurance executives in recent weeks have said those rates, while higher than first proposed, talking about the increases to the Medicare Advantage payment, they're still not good enough. And Humana flagged on Wednesday, that it will need to cut benefits. They specifically said, Humana said, we will be cutting benefits. A lot of other people are kind of dodging the question, but Humana just said flat out, we're gonna be cutting some benefits. Cutting benefits as well as exiting certain regions or states could shield Humana and its rivals, including United Health Group. We saw a lot of exits in the last year before that. They're telling us right here that you're probably going to see some more exits this year, more SARs, service area reductions, which means you're going to be exercising some of those guarantee issue options for Medicare supplements, which is great because those pay really well, obviously, right? That it is the right thing for the client. Certainly not the best thing for us as agents, but at least we get to take care of some folks. Medicare Advantage plans, it goes on to say, account for 80% of revenue for Humana, 33% of revenue for Aetna, and 12% of revenue for United Healthcare. All insurers are likely to cut back on benefits, but Humana will be cutting back the most, said the chief operating officer at Bale and Gaynor. Cutting those benefits encourages costly members with higher rates of medical needs to seek other plans. Aetna's comment is great. They completely dodged it 100%. Aetna continues to offer quality insurance coverage in a manner that is sustainable for our clients and our business. And United Health declined to comment completely. But Humana CEO Jim Reckton on a Wednesday call with analysts and investors said the company would have to make cuts to reach profit targets. They haven't said anything about any more commission cuts in here. but they're definitely talking about benefit cuts. Potential benefit changes in 27 may just be the matter of leveling the playing field for Humana relative to its peers. So buckle up. It's going to be another wild AEP, it looks like. And it probably, at least according to this article, and it's straight from the horse's mouth, Humana is saying they are going to be cutting benefits. So your Humana plans may not be as rich. Maybe you'll see less dental. Maybe you'll see less OTC. Maybe they'll ditch some of the gym membership stuff. I don't know. We'll find out in October. But plans are definitely going to get trimmer. Moving on. I said Kaiser Family Foundation just dropped an updated analysis on Medicare Advantage enrollment for 2026. I've said this many times before. I'm just going to say it again. If you're not paying attention to Kaiser Family Foundation and the data that they put out, you're missing the boat, man. These guys are really good at keeping their finger on the pulse of Medicare in regards to analysis, trends, cost, etc. And you can use this information to your benefit if you're savvy. It's not that hard. So they're basically going to go through, I'm not going to go through this whole thing, but I'm going to go through a few highlights for you and show you some of the graphs. More than 55% now of eligible Medicare beneficiaries are enrolled in Medicare Advantage. You may remember years ago, we were originally estimated not to cross the 50% threshold in Medicare Advantage enrollment until 2030. And it's 2026. We are more than 4 years ahead of schedule. So 55% of eligible beneficiaries in Medicare are now in a Medicare Advantage plan, and it's still growing. In 26, nearly one quarter, 23% of Medicare Advantage enrollees are in special needs plan, reflecting a steady increase. Now, a big part of that increase, certainly there's increase in the people qualifying for Medicaid and enrolling in D-SNPs, but there's also a big jump in the C-SNP space, which it's going to talk about. Why? Well, because there's more money in C-SNPs for the carriers. They've made it easier for us. And a lot of agents are catching on that, hey, if someone has uncontrolled hypertension or whatever, right, diabetes, heart complications, I can get them in a C-SNP, save them more money, get paid, et cetera, et cetera. And if they're also Medicaid, they get the SSBCI stuff, like it's all gravy. It also says that Medicare Advantage enrollment is highly concentrated. I think we probably know that. United Healthcare being number one, Humana being number two, and on down the line. But here's your beautiful little graph, right? This is your Medicare Advantage penetration. Here's your Medicare Advantage enrollment. So there's now 35 million people enrolled in Medicare Advantage plans, which again is just over 50%, right at 55%. Past and projected. Right, so they're saying now by the time we get to 2035, it'll be 63% of the Medicare population is going to be enrolled in a privatized version of Medicare. Says 6 in 10 Medicare Advantage enrollees are in individual plans that are open for general enrollment, because there are some group and union sponsored plans, and they break it down here. Now, understand these percentages are based on percentages of Medicare Advantage enrollees, not percentage of total Medicare population, right? So in 2026, as an example, 23% of all Medicare Advantage enrollees are in a special needs plan, D-SNP, C-SNP, and I-SNP. 16% are in union and employer-sponsored group plans, Medicare Advantage plans, right? Group Medicare Advantage plans. And then 61% are the individual plans open for general enrollment. Special needs plans comprise a growing share. This is your special needs graph. Look how fast it's grown. Back in 2010, only 1.3 million people were in special needs plans. It's 7x'd in 16 years. Cost of living, plan expansion, brokers aggressively going after Medicare, Medicaid people to get them into D-SNP plans because there's money there for us. 1.7 million are in the chronic special needs plans. And then that top little bit is the handful that are in institutional I-SNP plans for people that are going in and out of skilled nursing facilities and so forth. I'm going to go ahead and drop this in there for you guys. You can check it out a little deeper, go through some of the data. Very good information, right? It even tells you who. We already know this, right? United Health Group has 26% of the Medicare Advantage enrollment population. Humana with 20, CVS, Aetna with 12, Kaiser 6, Elevance 5, and then everybody else is 31%. So I will drop that in the group for you guys. Y'all can check it out. And then this one, I think will definitely, this next article might get you buzzing a little bit. Study finds payments to Medicare Advantage brokers potentially reach $10 billion annually. Now, I am definitely one that appreciates that we make a handsome living doing this, helping people. It is very much needed. But for all of those agents that are out there that like to brag about how rich they are selling Medicare Advantage plans, I would encourage you to stop that nonsense. You're bringing attention to us that we probably don't want, right? Calling your events the $7 million Medicare Summit, things of that nature, or seven-figure Medicare Summit, whatever the hell it's called. All kinds of stuff like that, right? Posting pictures. I mean, just recently, there was a reel of a very popular broker in our space showing a reel of him and one of his partners sitting on a private jet talking about there's no money in Medicare. Obviously there is. And I know it's a great recruiting tactic. You can get people attracted to our space by showing them that you can make a lucrative business in this model. But it also brings attention to us that we probably don't want. Just saying. Because now we got a group from Brown University that's done an entire study on how much money independent brokers make in the Medicare space. And this is definitely not the kind of attention we want. Even though I will tell you, as I'm going to go through this article and you're going to see it, there's a bunch of bad information in here. Like they don't have all the facts. And you will definitely see it. But that's not the issue. Like it's not that they don't have all the facts. It's that they think they have all the facts. And these are the type of people that lobby and make rules and make laws that affect the rest of us, right? There's not a bunch of Medicare Advantage brokers or Medicare brokers hanging out in Congress writing articles like this, affecting real change. Sure, we got a couple of lobbyist groups. We got HAFA, we got NABIP, we got NIFA, whatever. But these are the people that they listen to and make decisions based on. So through a Freedom of Information request, they took and it looked at the Medicare Advantage broker market. New research offers one of the clearest pictures yet of just how large the Medicare Advantage insurance broker market has become. Published as a research letter in JAMA Internal Medicine, the study from health policy scholars at Brown University found that payments to Medicare Advantage brokers more than doubled between 2014 and 2022, rising from $3.9 billion to roughly $10 billion a year. At the end of the day, this is money that is coming from U.S. taxpayers, said Myers, the guy that heads up the study. He is an associate professor of health services policy and practice. While insurance companies are spending a ton of money on brokers, we don't know if it's actually in the beneficiary's best interest, since brokers are beholden to the companies. There's misnomer number one. Right? He doesn't understand that, number one, we all get paid the same thing. We're not supposed to be beholden to any given carrier. And if anybody's responsible for steering, it's the fucking carriers. Pardon my language. The study doesn't answer every question, but it's a step. It's a first step in better understanding the role brokers are playing and how many people are being enrolled through brokers and how much money's flowing into this. In the U.S., millions of older Americans are use brokers to help them choose Medicare Advantage plans, yada, yada, yada. They are paid insurance commissions. The analysis conducted by the research team at Brown Center for Advancing Health Policy offers a rare behind-the-scenes look through a Freedom of Information request. In 2014, 36% of first-time Medicare Advantage enrollees used a broker, a figure that rose to 44% by 2022. One of the most surprising findings, according to the study, is that renewals rather than new enrollments were the primary driver of broker spending. Brokers receive an initial commission upon enrollment and additional annual payments for as long as the beneficiary remains in the plan. By 22%, or by 2022, 70% of Medicare Advantage beneficiaries generated a renewal, accounting for 74% of all broker commissions. 70% of Medicare Advantage beneficiaries generated a renewal. I guess what are the other 30%? Is that the enrollees that are in non-commissionable plans? Or are they not generating, or is that business that's not being generated by a broker maybe? I'm not sure. I'd be interested to see what that 30% difference is, because wouldn't 100% of Medicare Advantage or close to it generate renewals? But it's saying that 70% of all broker commissions are coming through renewals. That's probably pretty accurate, I'd say. I mean, when I look at our income that comes into GoAvila, yeah, I mean, the majority of our income at this point is not new business. It's the business, it's the payments for everything that we've written over the years that's still on the books that we manage. Moving on, it says a lot of brokers getting paid not for helping a beneficiary make an active choice of what plan to enroll in, but just collecting on that choice after the fact. We didn't expect that number to be so high, and it's been increasingly pretty dramatic over time period that we can observe. Now, that is another misnomer, but I understand how they can come up with that thought process, that a lot of brokers are getting paid not for helping a beneficiary make an active choice, but just collecting on choice after the fact. Now, I know that a lot of you are going to argue and say, no. We work very hard to talk to all of our beneficiaries, all of our Medicare Advantage enrollees every year, and make sure that they are still in the right plan for them. So we are actively helping them. And I would agree. I mean, just in the marketing money we spend alone doing retention campaigns as we get to the end of the year, because we send out email, we send out mail, we do phone call, I pay someone to call them all and say, hey, Mary, it's us. We helped you with that Humana plan last AEP. I wanted to check in. Have any of your situations changed? Right? I run analysis to see which plans are exiting. Does it affect my market or my clients? And let me prioritize them. Network changes, like, some of us are very on the ball with that and making sure that we keep those beneficiaries. And yes, but they're making an assumption that there's a ton of us out there that are just enrolling people and walking away from the relationship, which I don't believe is true. Maybe it is in the larger scope of things, especially when you bring in these select quotes, eHealth and GoHealth of the world that don't really do any retention work. They're just flipping and ripping shops. Maybe so. But it says the findings add to growing questions about incentives in the broker market, including the possibility that brokers could steer people towards plans offering higher commissions rather than the plans that meet their health needs, Myers said. And that is a big part of where he is in error. He is in error because our commissions are levelized or leveled, whatever that word is that I'm trying to use. So we should get paid the exact same amount of money no matter who we sell, with exception of Humana, since they've taken away some of our commissions and prorated us. Now we're not truly being level, and Humana is steering us away from them in some instances if you are an agent that goes after commissions. And if you're an agent out there that is turned off by the fact that Humana has not only made a lot of plans non-commissionable, but more importantly, they are now prorating our first-year commissions for true-ups for new to Medicare. Like, I don't blame you, because I mean, at this point, if you write a true-up in the first quarter, you're still making a good commission, right? If you write a new to Medicare with Humana in January, February, or March, you're still going to get paid pretty close to the full $694, $725 next year. But if you're writing new to Medicare with Humana in October, November, December, how can you afford to market to that? You're only making like somewhere between, what is it, $23 to $70, somewhere in there. How can you afford to market to that? Granted, if you can get them through AEP, they'll stick on that plan and that'll grow your renewals, but you're getting hosed on first year comp. So he's wrong on that fact, but there are some things that are happening out there that are driving us in certain directions, right? Because we have to make a living as well. And then again, we already know there's still massive lawsuit involving eHealth, SelectQuote, GoHealth, Humana, Aetna, and Elevance, all for steering business. But people love to point the fingers at us. Why? Because we're the small fish in the pond. We don't have the big lobby dollars. We're not the ones generating all that kind of money. The research cautioned that the data does not show the exact amounts each plan paid, and as a result, the $10 billion estimate could be an overestimate if some plans paid less than the federal maximum commission. At the same time, the total may be an undercount because the data doesn't include potentially large bonus payments tied to enrollment targets. Is anybody getting a bonus payment for enrollment targets? Raise your hand. Anybody? I'm not. And we write a shit ton of business. No carriers offered me a bonus. No carrier said, hey, Merwin, if you write this amount of business this year, we'll give you a bonus. Nope. If y'all are, tell me. I'd love to find out. I haven't gotten a bonus in Medicare Advantage sales ever. So again, some more misnomers that he's got there. Now, perhaps, I don't know, perhaps eHealth, SelectQuote, and GoHealth are involved in something where they are getting some bonus payments. Couldn't tell you. He doesn't mention those brokers in here. I would hope that he is lumping them in with the rest of us brokers and not just targeting the individual brokers, and agencies and small fish and not going after the call centers. I don't know. But, again, there are some incorrect information in here. But I'm going to leave it with his last statement. It says, we're spending so much money on this and it's really not clear what we're buying. We need to pay more attention on what's happening here. So we have their attention and we don't want their attention. So for the love of God, please quit posting pictures of you in a private jet talking about how many millions of dollars you're making in Medicare. Please quit calling your conference the 7-figure Medicare Summit. Please quit bragging about how rich you are because you sell Medicare plans. Keep it under the table and keep it private. It's your private information. Finally, I dropped this in the group. AHIP came out yesterday. I've already banged mine out. And I wanted to mention this slide. I talk about this a lot. I can't tell you the number of times I have this specific conversation with new agents coming into our business. Happens all the time. And I totally understand. Like, I'm not hitting on them. I'm just trying to cut through some noise, right? Because not everybody explains it the right way, but AHIP cuts it out pretty cut and dry. This is in Medicare Module 4 on marketing rules, right? Your Medicare marketing guidelines. And it tells you, the big frame right here says, hey, these are your prohibited, unsolicited marketing activities. Says marketing representatives are prohibited from making unsolicited contact with beneficiaries, including through door-to-door solicitation, including leaving leaflets, flyers, door hangers at a residence or on somebody's car. Any contact that is unsolicited door-to-door contact unless an appointment at the beneficiary's home at the applicable date and time was previously scheduled. You can't approach beneficiaries in common areas such as parking lots, hallways, lobbies, sidewalks, stores, and parks. Parking lots. Dude, I can't imagine being at the grocery store. I mean, I guess you can. I don't know. Hanging out at the grocery store and just trolling the parking lot for elderlies to try to sell some Medicare plans. I used to do parking lot pitches a long time ago when I was selling sports packages. We just go hit a busy Walmart and be like, yo, do you like baseball? Check it out. I got some cool tickets. But I can't imagine doing that in the Medicare space. But I'm sure people do at some level. Telephone calls without a scope of appointment, business reply card, or where the planned business exception is not met, text messages, yada, yada, yada. It gives you this list of all these things you cannot do. And a lot of people say, oh, when it comes to marketing in the Medicare space as a whole, I can't do any of those things. But no. That is not the case. Look at the words in the red circle. These are the communications and marketing rules for Medicare Advantage and Part D plans only. That does not include hospital indemnity, Medicare supplement, cancer, heart, stroke, other critical illness products, dental, vision, hearing, final expense, home health care, all of annuities, all of the other wonderful products that do fit into the senior and retirement markets. It is only in regards to marketing Medicare Advantage and Part D plans. So if you want to cold call somebody, knock yourself out. I'm not saying it's the best way to do business. But if you want to cold call someone in the Medicare space, you can do it in 49 of the 50 states. The only state you are not allowed to cold call anybody age 65 and older, regardless of the purpose, is Ohio. Any other state, if you want to pick up the phone call, if you want to go get, you can go to T65 Locator. It's an app you can download on desktop or on your phone. You can pay your little membership, and you can download lists of names, addresses, and phone numbers to call people. I think there's phone, is right? Aren't there phone numbers on the T65 Locator? I might be wrong. You can call my buddy Joe, Policy Pixel, and he will rip a bunch of data for you. He's got us 50,000 light items that we're slowly working and trying to find out the best ways to market to those, to that data. I got a steal of a deal on it. But you can get that data, and you can pick up the phone and call him. You're like, hey, Fred, your name came across my desk as someone turning 65 in December, yada, yada, yada. But you cannot, under any circumstance, call that person with the intention to sell them a Medicare Advantage plan or a drug plan on the same phone call. That is pretty much the rule. So I can't call him and be like, hey, Fred, have you seen United Healthcare's Medicare Advantage plan in your area? It's 0 premium. It's got some dental. It even gives you rides to the doctor. Can't do that. Right? But I can call Fred and be like, look, it looks like you're turning 65 soon. What's going on with that? What are your plans? What do you know? What can I help you with? 100% you can, right? You just cannot do it with the intention to sell a Medicare Advantage plan on the same phone call. Fairly simple. So how do you do that properly? You write the right script, right? You point it towards Medicare supplement and just general Medicare knowledge. You bang out some cold calls, maybe even some door knocking, and you can drum up leads that way. I'm not saying it's the best way to market, right? But you can do it 100%. So that's already in the group. I'm going to get some of these other articles in the group. But other than that, I just want to give you guys a few general tips on doing AHIP and maybe what to expect if you haven't already done it. Number one, I already dropped an announcement in the group that has a generic discount link for AHIP. There's a bunch of them out there. Like Rebecca Davis got one. I got one. There's a whole bunch of them. You can get them through the carriers. And sometimes it might actually be better to get it through the carrier because some of those carriers will actually reimburse you if you use their AHIP link and then you complete it and then you go write like 5 apps with them. They'll pay you back the $125. I don't know. Does Humana still do that? Does WellCare still do that? I don't know that they do because I don't remember getting my reimbursements last year. Maybe they don't. I know they did at one point. But otherwise, I did put in the group, right? It's a quick little thing about 2027 AHIP coming out. And then it has the link in there. There's no promo code needed. Click the link. Don't refresh it. Check out. It's $125. Piece of cake. But here's a few tips that I have from doing AHIP this year. It is nearly identical to last year. There's a few minor updates that you'll notice based on the final rule, right? And there is a question there that will trick you if you're not paying attention. So remember that you are taking AHIP now, even though it's only June of 2026. If you're doing it now, you're taking it based on 2027 CMS guidelines. So the questions about call recording, it's 3 years, not 10. The questions about the scope, no more 48-hour rule, right? So you'll see some questions in there that in your brain, you're like, oh yeah, 48 hours. Oh yeah, 10 years. No, not anymore. So pay attention to a couple of those little details. But other than that, it's nearly identical. Like it's very, very similar to previous years. Same layout, right? You got 5 modules. You can bypass the slideshow for modules 1, 2, and 3 and just jump right to the review. Bang out your 20-question review to see how smart you are. It'll tell you what questions you answered wrong if you did. I'm not saying that, maybe you did get 100, but if you answer any wrong in the review, it'll give them to you. The best part about those reviews, and this is where you should pay attention, especially if you're a newer person doing it for the first time, all the questions on the review are worded exactly the same on the final exam. So if you can get through the reviews making 90s or better, you're going to be fine on the final exam because it's the exact same damn questions, right? So take your time going through the review. When you see that you get a question wrong, learn it, mark it to memory, move on to the next module, right? Again, if you're a newer agent, you do not have to do the entire AHIP in one sitting. You can do one module, take a break, right? Especially if you're taking time to go through the reading and really learn it and practice it and so forth. But again, if you want, you can skip the training, the slideshow for modules 1, 2, and 3. You can't skip it for 4 and 5, but you can click next repetitively if you're in that ballpark and just go right to the reviews and then to the final exam. And as always, they have the fraud, waste, and abuse, the general compliance, and the non-discriminatory thing or whatever it is. If you are still needing continuing education credits, don't bypass the cheat code after you complete AHIP and purchase your CE credits. It's good for 8 hours, 8 classroom equivalent hours. That'll save you some money because 8 classroom equivalent hours through a normal online CE course is probably, if I had to guess, that's probably closer to $50, maybe $40 to $50. So here, man, you're getting it for 30. So you're getting a little shave on that. And that'll shorten your CE requirements, which really means every 2 years, you can rack up 16 hours of classroom equivalent training by doing AHIP every year. You just got to pay for the extra credits. And then after you're done, it's going to give you your pretty little certificate, which you really don't need because in most cases, you're just going to hit the transmit button and send it to all of your carriers. But it's super easy this year, in my opinion. If you've done it before, you'll knock it out again. Piece of cake, right? If you're a newer agent, the tips that I can tell you are this: number one, practice on the modules. I mean, the practice quizzes. Pay really close attention to them because the exact same questions are going to be on the final exam. You got to make a 90 on the final exam. If you fail it 3 times, you are out of the business for 12 months. You got to go sit on the curb. Well, yeah, I guess you're not out of the business. You just can't sell Medicare Advantage plans. You're just going to be ripping Medicare supplement final expense, which I'd be kind of jealous of, to be honest with you. That reminds me of the days I was in the field where I didn't have Medicare Advantage. All I could sell was Medicare supplement final expense. The only caveat was it all had to be done on paper. We didn't have any digital enrollments back then. Another tip, it is open book. Save the slides. Go back and review them if you need help going through the test. It's open Google. You can pretty much Google any question verbatim on the AHIP final exam, and you're going to find it in the first few links, whether it's on Quizlet or it's on flashcards or it's just in the AI. Now with AI, like it's answering the questions for you. Now, don't do that just in an effort to not learn and speed through. Do that to make sure you're getting the right answer because you don't want to have to do this thing. You don't want to fail it, number one, and you have to get a 90. So out of 50 questions, what is that? I think you can only miss 5 of them. Yeah, you can only get 5 questions wrong out of the 50. So if you're not 100% sure that you know exactly what the answer is, Google the question, get the answer confirmed, coach yourself up, move on to the next one, bang it out. Piece of cake. The second thing I would remind you is that if you have not been certified for 2026, the 2027 AHIP that is available now will cover you for the rest of this year and all of 2027 effective dates. Do you have to do AHIP right now? No, you don't have to. You have to do that plus your carrier certifications prior to writing 2027 effective dates. When will you start writing 2027 effective dates? Well, the earliest date would be October 15th. So by the time AEP comes, you need to have your AHIP done and all of your carrier certs. If you don't, you can't write until you get them complete. The longer you wait, the longer it's going to take to get all that crap done because you're going to get sidetracked. People are calling you. Carriers are backlogged trying to get their shit done. So eat the frog. If you saw my post on my personal page today, that's the word, that's the phrase of the day. Eat the frog. That's a Brian Tracy quote. And if you don't know what it means whatever the big thing is on your desk that you really don't want to do, and you keep procrastinating it and pushing it off. You're like, I hate doing AHIP every year. It sucks. No. Eat the frog, man. Just get it out of the way, right? It was released yesterday. I spent the evening, banged it out. I want it off my plate because I don't want to think about it. I don't want it looming over me. I want to get that shit out of the way. And then as carriers release their certs, I can jump in there and bang them out. Boom, 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 be done, ready to go. What is the difference between AHIP and doing it through NABIP? Great question, Heather. AHIP is accepted by all Medicare Advantage carriers. NABIP certification is not accepted by all Medicare Advantage carriers. There are still some carriers out there that don't accept NABIP. I might be wrong, but I think Aetna is still one of them. And Aetna is one of the biggest players in the business. So it's not just the little regional carriers that don't accept NABIP. There are a couple of big players out there that still don't accept it. So as much as a supporter as I am of NABIP, I'm on the board. I'm the chair of the golf committee, whatever. I'm very involved. I sponsor some of their local events. I would much rather support them and do the NABIP one. I'm not going to do double the work. Sorry. And I'm not going to do NABIP until it's accepted with all carriers. So when that day comes, you'll see me switch from AHIP to NABIP certifications. But until then, just knock out the AHIP. You know it's good for all carriers. Take your time on it, right? Use Google. Eat the frog. That's Tuesday training. I'll see y'all next time.